Hello guys, it's Aikido. It's Aikido here. I'm back with another banger. So I think sometime this week I'll teach you guys about all of this. But if you go to my Instagram, you can actually read here what I actually look for when I see that the market has been consolidating. What I also look for when I see that the market is actually reversing, and also when the market is retracing, and then because I want to trade the expansion right here, right? So basically you can actually read it, but I think I'm gonna make like a video, because this is like the core, the foundation, right? The power of three basically is also it's actually one and the same thing. Power of three, all this price delivery, market maker model. It's just, it actually all comes together as one basically when you're using the ICT concept. So today I'm going to be actually looking at how gold how gold performed today. So I get a lot of these questions when people ask me, how do you know that New York is going to be a continuation of London? How do you know if New York is going to be a reversal and actually go in the opposite of the entire direction the London session was going? So today I think today's class is gonna be answering that specifically that question. So I'm gonna ask you to just focus here for a moment. So here you can actually see that we went lower to take sell side liquidity right here, and then we've been gravitating back towards this imbalance here on daily, right? But also on this day we went lower, taking sell side right there, right? But I want you to focus on this day now. Excuse me, because this day is actually where I flipped bullish for gold. Okay, so I'm just, if you haven't watched the video where I actually teach how to spot a daily bias, or how to easily frame a daily bias, I think you should go watch that video. I think I'm going to leave a link to that video down in the description. So look at how on this day we took out the sell side liquidity, but we failed to displace lower. Look at the close of that candle, because we opened here, went lower, taken buy side, and then we went all the way up. We closed up. Okay, this day we took buy side, we closed inside, right? So on this day, from this day, I actually flipped bullish, because I thought, okay, if we took buy side here, we're already at the discount of this price leg here. If you look at the swing low here and the swing high, so this is the discount, right? We dug deep, we took sell side, so now we should come for buy side liquidity right there, especially if we fail on this day to displace even lower here. So this day took buy side here but closed inside. This day actually gave us a direction, which was Monday. So it showed that, okay, we are bullish. Okay, we are bullish because it took buy side and closed above, so it displaced higher. So I was looking for buy side liquidity up here, and actually to use this as inversion to actually potentially go for buy side liquidity up there. Okay, but I'm not gonna focus on that right now. I just want to give you like a framework on daily, because normally I have like a daily time frame up here. I just want to answer the question, how do you know if London, the New York session, is going to be a continuation of London? Okay, say you don't know how to frame a bias yet. Okay, so this is the 15 minutes. I'm going to employ this later. So today you just go in with let's say you want to trade New York, because, or maybe you also want to trade London. So this is what you do every day. This is what I do, right? I like to highlight my Asian session, which is from 7 to midnight. So I take the highest high between I take the highest high and the lowest low between 7 and midnight. So that's what I'm gonna do here. Okay, so there we go. So normally I do this. Okay, and then I'm just gonna have like a midnight open extended right across. So why do I always have my midnight open extended right across? It's because I know that this is the true opening price, right? So below this price I'm at discount, and above this price I'm at premium. Okay, so I want a best buy position is gonna occur below the midnight open, right? The best short position is gonna open above the midnight open, and I can always use this midnight open as a means or a way of me to, as a target to actually kill some profit. So I can use that to take partials off. Okay, so this is the London session. What do you have below price? You have buy side liquidity, you have sell side liquidity right there. Okay, so you just extend that out, previous day's range. You just want to extend previous day's low and previous day's high. So you have buy side. So right now, let's pretend that you don't have a bias. So you have buy side liquidity up there. Or we can just use this here. Oh, sorry about that. Let me just use this for, you have buy side liquidity up there, and also you have some sell side liquidity up here for previous day's low, right? I believe this is previous day's low. Yes, it is. Okay, perfect. So for someone who doesn't have a bias yet and is looking to take a gold trade, okay, so your New York, you highlight your London session from 2 to 5. You just always have that on screen, even though the time frame is actually visible if you look down the screen. The time slot. So I think it's important that you just annotate it like this when you're still a beginner, so that you don't lose focus and lose track, and actually have like a vertical line like this. Okay, so your tape reading price during the kill zone, right? Because that's when you're going to be taking a trade, right? So you just want to see how price behaves below and above. Okay, this is London open. You just want to see how price behaves above and below the midnight open. Okay, and also you have like a hard time frame, because let me just open the session breaks, yeah, so that you can see how price behaved when we opened, right? During the Asian session. Okay, so during the Asian session you look at price, how price behaves, because you already have PD arrays here. You are trading at discount of this dealing range because you are inside this dealing range, the swing low to the swing high. Okay, what has price done so far? Okay, we are digging inside previous day's range, and we already broke above a swing high here after taking sell side liquidity right there. So this could be our bullish market structure shift. How do we behave when we come to this part? Because that's why I always have like a 15 minutes time frame. So I want to see how price behaves when it comes to this part, right? Does this act as a support and push price higher, right? So that's what I want to focus on this time frame. So we open, we do all of this here. I'm just waiting to see the displacement as soon as the kill zone starts, right? Because any retracement, I can use any fair value gap as an entry and target any buy side liquidity. Could be buy side liquidity here, maybe some sort of a high here. In this case, I could have just because I could already see that it generated buy side liquidity for a short entry. I'm just going to extend this out from the Asian high. So here we generated buy side liquidity. We didn't take out the buy side, and then we traded back inside this. Let me just do this because I want you guys to actually see what I see here. Okay, so what did we do here? Because this is the Asian session, right? Let me just use this red, or maybe just use this color. Okay, let me remove this here because you guys are now gonna start, before you start thinking that that's the same thing, maybe also sync this in layout so you can see what happens here. Okay, there we go. So I just want to have, this is my Asian session. I only changed the color so far. Okay, calm down here. Yes, there we go. So I also have buy side liquidity in a form of Asian high right there. Okay, that's my buy side liquidity so far. I'm waiting inside the kill zone to get a trade. Okay, so I see that we went all the way down here. We respected this BC. I'm just gonna call it 15-minute BC. 15-minute BC, right? How do I know that it's gonna be a continuation? I wanna see, because I want to actually teach that today, because I feel like today was just a good example. So actually, this is how you frame your New York session. This is how you frame your New York session. You want to see how price behaves during London. So basically, this is a time where you write something down. A continuation of if New York is a continuation of London, if London did not achieve the high time frame objective, okay, you write this thing down. So if the London session achieves the high time frame objective, then the New York session will be retracement and will be targeting the internal range liquidity. I think you need to have this on your notes, and you always have to go back to this. Okay, so I'm looking here during London. I want to get a trade. I'm looking at how we generated buy side liquidity. Now we have relative equal highs there, right? That's liquidity. So on retracement, I'm looking to get an expansion to actually target this, because I'm inside the kill zone now. I've already seen that, okay, we are respecting the discount array here, so it means we are bullish for the session. So I was gonna buy this, but if say this is like the stop loss, because you look at this and you have 3 fair value gaps, how do you know which one to buy? Because we use that fair value gap as an entry. Okay, first of all, if you have 3 fair value gaps like this, you must always look for this, something like this. So how do you know which fair value gap to buy? I'm having real problems with this OBS. I was actually a couple of minutes, I was almost done recording this, so unfortunately I wasn't paying attention, so I have to redo this again, hopefully with the same passion. And this is really getting to me now. I think I need to uninstall it and then reinstall it. Maybe there's a new version or something. Maybe this new version is actually it sucks, man. So I think on the small video that actually cut out, I just played it and I saw, okay, this is where I actually stopped. So I was actually trying to explain how do you know which fair value gap to buy here. You have 3 fair value gaps, the upper one, the middle one, and the lower one. So this is what I always tell my students. You always have to check other confluences. So this is what you must always look if you have like a breakup. So you have a low, you have a high, you have a lower low, and then you have a higher high on retracement. So this is the price leg you are looking at with the 3 fair value gaps, right? So you're looking at this price leg, which is this price leg here, and then you want to take the fair value gap that's in line with the breakup to actually get that expansion, right? So this is what I was actually saying on the video here, explaining what it is that I actually look for when price retrace. On retracement, I look for opposing arrays near equilibrium. Okay, so I look at this. Okay, if I look at this impulse leg, right, where is my equilibrium here? So I just take a swing low and then a swing high. So I look for an opposing PD array near equilibrium. So here's my equilibrium. Where's my opposing array? I have this BC. It's a BC, so it's a BC, meaning it should act as support to push this, to actually expand higher and look for sell side, buy side liquidity up here. So that's the first confluence. This is at equilibrium. And then what is the next confluence? Do I have a breaker that's confluencing with the fair value gap? Well, in this case, it's not a breaker, but rather it's a mitigation block, right? Wow. So if you can just extend the high of this, this is your mitigation block. So this is your mitigation block, right? And then this fair value gap has two confluences, the midpoint, which is the equilibrium, and then you also have a mitigation block, right? So if I take an entry here, where do I put my stop loss? So my stop loss should have at least 3 PD arrays above here before it hits my stop loss. So if I have a mitigation block, I have the CE of this fair value gap, and then I should always keep in mind, or just allow that price could, since this week it was NFP week, always allow for for instance, if in case price is overzealous, then you should always keep your stop loss just below the CE of the discount BC. Okay, so just a little bit here, because sometimes it can just drop lower, weak inside the fair value gap, but close inside this fair value gap. So that mohawk, we're just covering that mohawk. So we're using the CE of this discount BC as the third PD array above my stop loss, because if price violates 3 PD arrays, your ass is next. That you must always have in mind. So this is a clean, if you can just put your stop loss just below your thing there, and have if you have a mechanical TP, you can always, this was a good one, 3R trade inside the London open, right? So this was just a good scalp, because you already saw that price was respecting this discount array, so we are bullish short term. Yes, you see displacement at the open of the session. This is telling you that now I'm running towards the objective, which was to actually purge buy side liquidity, and by retracing just before it purged it, it was actually generating buy side. Now we have relative equal highs. Retail traders see this as a strong support area. So once it retraces back inside, they start executing the sells because they believe it's forming a double top, which we are targeting, okay, as smart money traders. So in this case, if you have a breaker, you want to get an entry, here, that's in line with the breaker, and then if there is a fair value gap, just do the same as here. Leave your stop loss just below the CE of the lower BC. Okay. If the stop loss is too huge, then that's not your trade. Just leave it. Okay. There's always another trade. I think that's what I was actually explaining and saying before I actually went on to see, because I was just about to finish explaining the New York. Okay, so New York session, you also do the same thing. This is your 7 to 10. So 10 o'clock is my profit taking hour, because you have a London close, right? So you have a London close. Sorry about that, this is not London, this is New York open. So let me just put NY open, because just to save time. So you want to see, so okay, this is what I wanted to actually tell you guys. If you are going to be trading in New York, you must always have this, especially if your London session was just within the range. You look at how we didn't go outside we didn't take any sell side liquidity, buy side liquidity, that's external range liquidity here. We're just working inside the range. So if you're working inside the range like this, you then start to think, okay, what was London bullish or bearish? In this case, it was bearish. It was bullish, but it didn't reach the hard time frame objective. So we were just trading on a smaller time frame. If you zoom out, you can see this as a consolidation. Okay, this is daily, sorry. You can actually see this as consolidation, maybe on 5 minutes or 3 minutes. So we are inside the range, but the whole London session, here's the low, here's the high. So you must always do this, if you want to if you are framing your buyers for New York session. So this is your London delivery or price delivery, or maybe impulse leg rather. So if you are going to be bullish, we don't start by, in most cases, we don't start by taking out the London high. We just reserve it. We just trade lower. We take any sell side liquidity below equilibrium, okay? Below equilibrium of London session price delivery or price leg, okay? So that's what I want to see as soon as we enter in this New York. Are we taking out this buy side liquidity here? And if we do, I'm just going to look here, what other PD array do we have? Because then if we do that, if we take out the London high, we're going to take its liquidity and then imbalance it. Do I have an imbalance here above price? In this case, it was a huge imbalance, but normally you would get like an imbalance like that one above price, and then you just respect it. I'll wait and see if I get like a model. If I mean the model, I want to see something like this. Let's say we take out this buy side and then liquidity, and then we feel an imbalance on a high time frame. For example, this BC, but let's say it was a bit smaller, just above here. If we feel that BC, since the New York is starting and we haven't taken out sell side liquidity, I'm going to turn bearish for the session, at least for a short while. Once I see that and we trade inside that BC like that, and then I want to see if we're going to do something like this inside the BC, inside the CB. In this case, it's a CB. So I want to see price do this, come back for this high, newly created high, before breaking below market structure shift. Then inside this range, I'm looking for a fair value gap that's gonna send me lower. So if you guys enjoy such content, just like the video so I can actually see that you guys want more reviews like this one. But if we are not going to do that, I already have like a framework, and I have my London session. Since we are trading inside the range, I know for a fact that New York is going to be an expansion, because this is like a consolidation sort of a thing. So if you look here, what do I look for? Once I see price consolidating, I look for an external range manipulation. So I look for the market to actually take out, when it's manipulating like this, it's generating both buy side and sell side. So I want to see it manipulate and not close below or close above. So the side that's going to manipulate first and not close, not displace higher or lower. It's going to wick down but close inside the range. And then I want to see on a smaller time frame, do I get a market structure shift to go up before it takes out this buy side? If yes, then I'm engaging that. Once we take this, I want to see how we close after taking this buy side of the consolidation. If we close higher, then I'm leaving my trade. Okay, so I want us to actually see what happened here. I'm just going to remove this. New York session is now starting. You've already have your high and your low, and you already have equilibrium, and then below equilibrium, what do you have here? You have sell side liquidity. So you want to extend that, because you know that price is going to come below equilibrium and actually look to take out those sell stops or engage those sell stops, and then it's going to rally higher. So you're just framing and you want to see how price behaves, because you are now about to get an entry. Okay, let's play this. Okay, so you're waiting. Okay, you're tapering price, you're not pushing any buttons right now. Okay, so yeah, I'm looking at how price behaves once we make it to this premium, because this is premium, right? This is premium, so we want to see how price behaves here, right here. So I'm just going to use this. Okay, you are watching in anticipation to see, because you don't take a trade, guys. You don't take a trade. Okay, there it goes. Let's pause there. Let's pause right there. You don't take a trade if you haven't seen any liquidity being taken. Okay, so here this is the most important liquidity. Why? It's the midpoint of equilibrium of London delivery, and then this is the sell side. We have, normally you'd have like relative equal lows, which is, this looks like relative equal lows. So since we've opened, so you look at, okay, we opened here. What did we do? We took buy side here, we took buy side there, and then we broke low. We took buy side, sell side liquidity right here. Yes, this is also important, but this is the most important one because it's below the equilibrium price leg of London. You are looking in anticipation, and you're anticipating New York to be a continuation, because London has been trading inside the range. It hasn't done any damage, so New York is the one that's going to explode. So you're just waiting. You're looking at this as a build up. Okay, so let me just play it again. Okay, sorry about that. Okay, there we go. So we've now taken sell side here. Okay, I think the venue is right there. I don't really consider this as a bullish market structure shift, so I'm just waiting. Okay, there we go. There we go. I don't really focus on the wicks in terms of when I want to get like a clear market structure. Okay, now look at how price closed after taking this sell side. Nobody closed below here, not a single body, right? And you already see displacement higher. We are inside the kill zone, but you want to see a bullish market structure shift above this swing high, right? A close displacement candle that's going to close way up and then leave a fair value gap in displacement. You want to get a fair value gap in displacement. Write that down. You want to get a fair value gap in displacement. Okay. So this is your market structure shift. This is a proper market structure shift, not because of this wick, but because of two candles. This is displacement. If you go into 5 minutes, this is going to be a single candle, because this is trade 6. This is 6 minute candle. If you actually, think about it, and this is your silver bullet that never misses. So this is your entry, right? So actually go higher. Now you know that we are actually going higher. And what do you have above? You have this minor buy side liquidity, and also you have those relative equal highs right up there on the daily. So you just want to take this buy the fair value gap, stop loss below the swing low of this order block here, because you can see that you have an order block there. You just put your stop loss below that, and then you just have it. In fact, let me just extend this these relative equal highs on daily. I'm just gonna sink this in layers so it appears also up here, right? This is your trade right there, and you're gonna keep on taking partials as you go, right? So I just want to see how this played out. Okay, if you're going to be scared to fail, and then also you have this in a form of external range liquidity, the previous day's high, right? We actually started by highlighting this, if I'm not mistaken. So, and then this is your trade, right? If you look at this trade, the ratio is sick. It's almost 6.8 RR, almost 7. So let's just play it and see how it delivered. Okay, now the New York session is actually giving you a gist. It's actually giving you the intended direction, right? This is the expansion that I was talking about on the previous post. So bear in mind that I'm taking my profit at 10 o'clock. So 10 o'clock is my profit taking hour right here. Boom. Boom. Guys, it doesn't get better than that. So this is how you know that the New York is going to be a continuation of London, okay? That's exactly how you know, okay? That's exactly how you know, okay? It's exactly how you know. So this is just I think this is a cool review of today's price action on both sessions. If you find any value on this video, just give me a like and then also subscribe to the channel. I think this is it for me. Just rewatch this video a couple of times. Actually, I said some profound things on this video that I believe are going to help you to grow as a trader. And come join our Discord, man. We hold live sessions for free. For now, it's free of charge. And yeah, cheers, man. Have a good one.